Wonderful good day, ladies and gentlemen. Today, Commodity TV here in London, and we are at the offices of Prairie Mining. Yeah, fantastic coal company out of Poland, and I'm very happy here to talk now with the CEO, Benjamin Stoikovich, about the company. Benjamin, thank you very much for taking the time here.
Pleasure.
What is your company about? Give us a short introduction, please.
Okay. We have a 1.6 billion tonne JORC-compliant coal resource in the Lublin Coal Basin in Poland. The Lublin Coal Basin is a relatively new basin. It was discovered in the 1950s, and we have a very strong land position there with over 200 kilometres of cored borehole. We've completed our scoping study, and it will be the lowest cash cost delivered coal into Europe.
So when you say the lowest cash cost already delivered, then let's dive into your project, because it looks like that you have a PEA already, right?
We have a scoping study. So we released that in April this year. It was conducted by Wardell Armstrong International, which is a leading international mining consultancy. But we have a certain advantage in these technical studies. We have right next door to our concessions an operating coal mine, a mine that's been operating for 32 years. And that mine itself is the lowest cost producing mine in Europe today. So for us to benchmark very reliably what our costs will be in the future has been quite easy for us, and that is all reflected in our technical work.
I've went a little bit through your presentation, and I really liked what I saw when I sat in the airplane. First of all, I think you have calculated with something like $96, $97 for 1 metric ton of coal, and it looks like that the free on rail costs were like $55, $56. So that's a pretty nice margin, right?
Yeah, actually, the free on rail cost for our project will be more like $37 per ton. And the current price of thermal coal in Poland is something around $70 per tonne. The long-term price is projected to be higher than that, so it's a very healthy cash margin.
Absolutely. Can you give us some more details of the scoping study? I saw also something like roughly $700 million would be the project cost, right?
The forecast capital expenditure for the project is $700 million, more or less $700 million US dollars. The biggest component is the shaft sinking, that's around $230 million, and there's roughly a $96 million contingency in that.
Okay. I saw also that you are only 15 kilometers away of the rail network. Is this cost also included already in the scoping study?
That cost is included in the scoping study, but the way we've looked at that as it is built by a third party, and we pay a toll cost to haul coal across that railway line. It is actually one of the big advantages of it. Constructing a new coal project in Poland. The infrastructure is all in place. Not many people know this, but in Poland during the 1980s, Poland was the world's third largest producer of black coal and the world's second largest exporter. And in those years, Poland was exporting 45 million tonnes per year.
Wow.
Last year, Poland exported something like 7 million tonnes. So you imagine you have all of this infrastructure, rail, port, loading facilities, completely underutilised in today's market.
And workforce, of course.
And a huge, highly trained underground mining workforce. There's still 110,000 people directly employed in coal mining in Poland. They're very skilled, they're very hardworking, and the labour cost base is probably 1/5 of what it is in Australia. So that is why we can have such low costs for this project, and why the capital intensity is a lot lower than other coal projects around the world, because the infrastructure has been built for us. All we need to do is connect into it, which will require an 18-kilometre spur line.
Well, I think that's manageable, isn't it?
Very manageable.
Fantastic. Let's talk a bit about the quality of your coal, because I think this is one of maybe the key drivers of your project. As we all know, Germany shut down, I think now 6 or 8 nuclear power plants, and so we do a lot of we call stone coal, meaning really hard coal and brown coal to generate electricity. But I think very important is to talk about the quality of your coal, because I saw your ash is very low, right?
Yeah.
And some other important parameters.
So when we started this project around 1.5 years ago, we thought we just had a thermal coal project, and the mine next door to us has been producing thermal coal for 30 odd years. They've been producing thermal coal for the Polish domestic market. We had to do drilling as part of our agreed expenditure program with the Polish government. And we took core samples, and we had those samples analysed in international labs. And what we learned was that we actually had much higher coal in situ than we could ever have imagined. So firstly, the most important thing is, in one particular seam, we've identified semi-soft coking coal. So now this coal can be used for the steel-making industry. Europe imports around 70 million tonnes of coking coal annually, so it's a very big market right at our doorstep.
And from where does that come? Do you know that?
It comes from the 391 seam, which is the main target seam for our project. We have over 300 million tonnes of resources in that seam, so it's enough for the first 25 years of the mine life. And that coal can be sold to coke ovens and blast furnaces all over Europe, Poland and Western Europe.
Okay.
It's usually typically higher value than thermal coal as well. Then we look at the thermal coal, and it's clear to us now that we can produce a very high quality, low ash thermal coal that can be exported all over the European Union. And keep in mind, the European Union is still the second biggest importer of thermal coal in the global market today.
Wow.
So in 2012, the EU plus Turkey imported or burned 265 million tonnes a year just for power generation.
So you have a real domestic market.
You have a huge domestic market, hundreds of millions of tonnes per year. And the beauty of our project is our coal is produced, brought up through the shaft and put in a railway wagon in Poland, which is connected to the rest of Europe by standard gauge electrified rail, so we can rail it nearly anywhere in the EU at quite a low transport cost.
Wow, that's fantastic.
So you've got a massive captive market at your doorstep.
Yeah, absolutely. And I think also like $700 million sounds in the first instance, it sounds a lot.
Yeah.
But I think when you compare it to other international projects, they are all well over $1 billion, right?
Absolutely.
Yeah.
And we're looking at a mine that can produce 6 million tonnes per year of saleable coal. So the capital intensity is relatively low when you benchmark it to new coal projects around the world. In my former life, I was an investment banker, and I've worked on financing coal projects in Mongolia, in Mozambique, and Indonesia.
So you are used to it?
I'm used to it. But it's quite rare that you have the infrastructure has already been developed for you, and that's a key advantage in our capital cost here in Poland.
Absolutely. Yeah, I think infrastructure is normally the largest part of our costs, right?
Absolutely, especially for bulk commodity projects, which are as much about mining as they are about logistics.
Yeah, rail import.
Yeah. And the other beauty of Poland is that they joined the EU in 2004, and part of joining or part of EU membership means your rail network has to become open access. So all the big European rail freight operators now work in Germany. DB Schenker out of Germany, Freightliner out of the UK. And what's happened is rail freight haulage rates in Poland have come down dramatically since these other companies have come in. So again, logistics are quite competitive for us.
Yeah, great. So just for the end of our interview, what are the milestones you want to achieve in 2015? Let's say, what is next?
What is next? Okay. We're currently halfway through our pre-feasibility study, and we'll have the results of that released by the end of June 2015. We've already completed our minimum expenditure program agreed with the Polish government. So we've completed all of our drilling, and we'll have those results out early in the new year. We're conducting 2 marketing studies for the project, one for thermal coal and the other, importantly, for semi-soft coking coal. So they'll be released in the first quarter of next year. And we're also advancing with our Polish permitting. So we hope to have a mining concession by early 2016.
Wow, that's fantastic. And then you can start to build the plant,
Then we can start to build the plant.
Wow.
Yeah.
How long would it take until you might be then into production?
Well, if we start in the middle of 2016, we'd be able to be in production during 2019.
Okay, so
it's
that's
about 3 years.
foreseeable 3 to 4 years from here.
Exactly.
Yeah, fantastic. My last question, of course, all costs money. Drilling costed money.
Yeah.
Now you do the pre-feasibility study. How much is in the bank?
We have $15 million Australian cash and cash equivalents at the moment, which is more than enough to see us through to the end of our pre-feasibility study and well into the bankable feasibility study. We've finished our drilling for the project. We'll have most of the resource in the indicated and measured category for the pre-feasibility study. So we're actually in a very good position.
Yeah, that means you are really carried through.
Absolutely.
Fantastic. Great. Benjamin, all the best for you. And of course, in 3 weeks, roughly, is Christmas. Merry Christmas and all the best for the new year.
Likewise. Thank you.
Thank you. Ladies and gentlemen, there was Benjamin Stoikovich, the CEO of Prairie Mining. Well, you heard it. A very compelling coal project in Poland. Fantastic numbers, like only $700 million of possible investment to be made. Fantastic infrastructure. The workforce is there. Ports, rail, everything is there. And also, which is very important, the company has over $15 million in the bank still, and most of the work is done. So I think there's a lot of already risk taken of the company. Have a look at it. Thanks. Bye bye from London. Merry Christmas.